going to see a better quarter in Q3 than we saw in Q2. Q2 really was the worst of the worst, and Q3 will be better. As we said, looking ahead to Q4, I think it will probably trend downward. Then it's possible we could see them post profits in maybe 10 to 12 billion dollars, which it really isn't that bad. It's better than the last quarter. But part of the issue is also this dividend. Like you said, they've committed to paying $75 billion over the course of the year in dividends, and that's more this quarter than they've made in profits. So I really don't expect them to go back on this commitment, both to their public shareholders and also to the government. And so I think the real issue is going to be, where else are they going to be cutting from? We've seen them go back on their commitment to build a crude to chemicals plant, refineries in China, LNG, and it will be interesting to see where they remain committed, particularly this commitment to increase their crude production, their maximum sustained capacity to 13 million barrels per day.
To your mind, Ellen, what else could be on their cutback list to cushion dividends at this point in time to keep it with that commitment?
Well, we've seen them renegotiate some of their payments for SABIC, so it's possible we could see them announce layoffs. In fact, I think that this is not what they want to do, but they're really hamstrung at this point by the Saudi government, which has kind of forced this dividend commitment on them. And when you look at what other oil companies are doing in this low price environment, they've cut capex, they've cut dividend, but now they're laying off. If we look at Exxon, they announced major layoffs to come in light of very disappointing results. So I wouldn't be surprised if we see Aramco cutting back on more aspects. They are also looking to sell assets, but that's proven to be quite difficult in this price environment.
Which raises the question as to whether we'll get any more information on their view of the price environment today. And what do you think looks realistic, Ellen? I mean, given that we still have these demand concerns tied to COVID.
Yeah, I think that from here on out, the demand picture is really not good. They basically demand, I think, for this year, or since the COVID crisis began, has really peaked in Q3. It's all downhill for the rest of 2020, particularly when you factor in the issue with Libya. I think that the Saudis will probably get OPEC Plus to agree not to increase production more starting January. But with Libya bringing that additional production online, they've got problems with Iraq. It's really not looking good with the demand picture and the supply picture.